Okay, hello everyone. Hi, can you see me? Can you hear me? Welcome back to my YouTube channel. This is the 4th of March 2023 on Saturday today. So thank you very much for joining today. Good to see you. And I hope you're having a great weekend today. So let's see. So yeah, today I was thinking what to talk about in terms of the topic today, and I decided to talk about my trade performance in February and also the psychology or in terms of trades. Because at some point I realized that the important part is really the psychology management, then which strategy to use and when to enter, when to exit. I thought psychology is the most important, and then the risk management. Well, technically the risk management and psychology management are kind of connected together, and to me risk management is actually includes exit timing. I think exit timing is a part of the money management or the risk management. So yeah, I think it's both ways it's important, but yeah, I thought it would be interesting to also share my trades and also my performance in February today. Okay, so yeah, let me hold on. Let me first get ready on my screens. Just hold on. Okay, I see many people here today. Thank you very much for joining. All right, first, Christopher, good to see you, and Rajesh, thank you so much for coming back to Ichimoku community. Thank you very much, Rajesh. Ashish, master of Nasser, Vipin, Blackwater, good to see you. Alright, and Rajesh, also good to see you again. TikTok, James, Oli, Chia, good to see you too. Oh, Blackwater, thank you for the reminder for the like button. So if you liked it so far, please press like button, that would be great. Thank you very much. So yeah, today first let me share my trade performance in the month of February. Because I was going to share every 3 months, but then I guess I start to get some questions in terms of how my performance is so far in February, and that's why I first decided to share it today. So hold on, let me see. Let me switch screen now. Alright, one group, good to see you. Alright, Jim and Photo, good to see you too. Thank you for joining. Manuel, Christine, brother, good to see you. Okay, psychology is the most important factor of all forms of gambling, I think. That's right. That's right. All form of games, I would say. Psychology becomes the most important. Yeah, so let me see. So first, let me share screen. And here is my trade performance in the month of February. So in the February, I took 7 trades total. Hold on, let me fit this into page so that you can see the whole thing like this. So yeah, in February, I took 7 trades, as you can see, and every time I enter trades, I take 2 positions. So 2 positions on each, and I took 7 trades and 14 positions. And my ending result was 4.2% return. So my win rate was 35.71%, and my profit factor was 3.4, and my return was 4.2%. So that was my performance in February. Looking back, February has been really choppy and I couldn't see big trends. So I remember I struggled, and also I was very careful on which one to trade. I have been really selective on which one I take trades. But and the best trade I took in February was this one on the USDJPY. On USDJPY, which I took on the 24th of February, I took 2 positions as usual, and one I took 76 pips of profit, and the second position I took 61 pips of profit. So that was my biggest winning trade in February. And also one of the trades on the pound JPY, which I took on the 14th February, I took 46 pips on one of the positions. And so these 3 were big wins in February, and bigger wins in February. And the rest were almost, break even and small losses, small profits. Like a 20 pips of loss, 10 pips of loss, 13 pips of profit, and the break-even trades. So that was my overall performance like this. So every time I enter trades, if you follow me, maybe you know already, but every time I enter trades, I take 2% to stop loss. So let's say the market goes up this way, and I enter buy, and let's say I take the stop loss here below the pushback, and I risk 2% to stop loss. 2% of what I have, which is 400,000. I take 2% to stop loss and take entries every time. So that's how it works. But in the month of February, sometimes I've seen the market is really close to the resistance support, the major weekly, daily resistance support, but I took the trades, and also there was big news ahead. For example, the trade I took Swiss franc JPY on the 15th of February. There was a big news ahead about 1 hour later. It was this one, Swiss franc JPY. It was, I mentioned here, I took 1% risk per trade because this was taking 1 hour before the big news. So this was trading in live. I do live trades in the KTS Academy and also the GTS members. So this trade was done live. And I wanted to trade live because I wanted to show how the process of screen charts, pick the pairs, and pick the pair to trade, and look for and wait for the entry confirmations. I wanted to show, and that's why I took this trade, knowing that there will be a big news ahead in 1 hour. And that's why I took 1%. Sorry, so this one, so yeah, on this trade, so this is my entry to buy, and this was my stop loss, 32 pips of stop loss, and I risk only 1%. This case, I only risk 1% on this trade. So like this, I change the risk per trade, depends on the market conditions and depends on the situations. So I've been very careful in terms of the risk management and also psychology management like this in the month of February. And I have been also careful in March, and also onwards I will be careful still continuously, and I will be very selective on which one to trade. So I take less entries. I take much less entries so far. I took only 7 trades, but still make some profits is my strategy. So that was my performance in February. But in terms of the psychology, I think staying away sometimes makes us profit is also true. And when I say this, then some people may think, so you are the full-time trader and trading is my main source of income, but why can you stay away? Don't you feel worried? Don't you feel frustrated when you're away? I get these questions sometimes. And the answer is no, but rather I feel comfortable being away from the charts because I know that the number of trades does not relate to how much I make profits based on my experience. That was like based on my experience. Sometimes before in the past I took 30 trades, 20 trades per day, and almost like 600 trades per month. But I kept losing every month, and that was so frustrating. But now I only take 7 trades, and so if I just read out 7th February 1 trade, 14th February 1 trade, 15th, 17th, and 24th, 28th. Well, 28th I took 2 entries, but the rest of the days I only took 1 trade. So each week I would say weekly I take either 1 or 2 trades, and that's it. But I can still make profits. In this way, I will be very selective, and also I don't have to stick to charts, and I can do YouTube. I can have a good time with my wife, my friends here in Dubai, or I can do some other activities for myself, because I value time with my family and what I do than trading. So I say myself I am a full-time trader because the trading is my main source of income. But yeah, it doesn't mean that I take trades every day. It's easy to say but difficult to do. But once you master this mindset, then things becomes really easy, and your life will be much more joy. So that's why I say I value time efficiency more than win rate. Again, my win rate in the month of February was only 35.71%. Yeah, so out of I got 5 win trades, 5 winning positions in 6 losses, and 3 break-evens. And I count break-even as loss, and that's why my win rate shows like this, 35%. But yeah, the most important is whether I feel comfortable to take trades every day, every month, every year or not. If I don't feel comfortable, then I can't continue my journey this way. So the most important based on psychology is to be comfortable whenever you are away from the charts. Also when you are trading the charts, trading the markets, you be comfortable, and I recommend you to aim for the PF. Profit factor means the risk and the reward ratio overall. So that's 3.4. So that means every time I enter trades in February, my risk reward in average was 1 to 3.4. So because of my PF is very high, I can accept the low win rate. And I have losses. I have much more losses than wins, and that's because I cut the losses very quickly. For example, if the market goes up this way and I buy, I put the stop loss here below the pushback, and if the market goes up this way, I trail the profits. I move the stop loss to break even, and then I trail along the way up as long as it goes. And if the market goes back, that's when I exit my trade. That's when I take profit usually. But if the market goes back against my direction towards stop loss, then I cut the loss very fast. I never let the market run to hit the stop loss. I always exit before the price hit the stop loss, and that's why you see more losses than wins. But in this way, my drawdowns are kept small. So for example, my first trade Euro USD, I took 0.55% times 2, so it was 1.10 drawdown percent. So this was 1.1% drawdown. So hold on, let me do this on to the right. Hold on. Okay, so here I think you can let me scroll to the right. To the right, you see drawdowns here. So yeah, I got 1.1% drawdown on the first trade, and the second loss I took 0.24% only drawdown, and the third loss I took 0.41 drawdown. So my drawdowns has been really kept small, so that's why my PF becomes higher. So if you are building a strategy, or if you're using a strategy to practice, then the way to raise PF is only two ways. One is whether you have the big reward. In this case, the market goes up and you take a buy, you put the stop loss again here, and the market goes up this way, and you have the bigger reward. So this is one way to raise the PF, to have higher reward. Then you have the higher PF, because this is risk to reward ratio overall. But at the same time, this is the second way to raise PF is to keep the losses small. Because if a loss is big, let's say you have won 100 pips, but if your loss is all 100 pips, then your PF is going to be 1. So, but if your exit is 50 pips, then your profit 100 pips, then your PF becomes 2. Risk reward becomes 50 to 100, so 1 to 2. Or if your reward 100%, 100 pips, and if your risk is 25 pips, then PF becomes 1 to 4. 25 to 100 is 1 to 4. So, and which one is more easier? To have either have a bigger reward, 100 pips, 200 pips in the markets, or have the less risk, lower risk. And having lower risks per trade is much more easier than having higher reward, because we never know how far the market goes. It may go 100 pips, it may go 200, but it may go only 10 pips. We never know. So this is unpredictable. And we never count the numbers that are unpredictable in the stats. You never do that. But only count the numbers that are predictable, which is the stop loss pips or the risk per trade. Because risk per trade you can control. You can calculate the lot size to make it 2% to stop loss, and you can manage it on your own, and you can control it. So if you control the risk per trade, then once you have the bigger reward, then naturally, automatically the PF becomes higher, is my risk management mindset. And that's why my losses are kept very small. So so that's why I have win rate 35%, but I feel comfortable because of the PF. So that was a little bit about risk management skills that I want to share today. But in terms of psychology, again, I feel comfortable being away from the charts. So again, I took only 7 trades, and if you are me, and if you only take 7 trades, how do you feel per month? You only take 7 trades. You only allowed to take 7 trades per month. Then how do you feel? Do you feel frustrated? Do you feel stress because you have to take less number of trades? Yeah, I thought before I become a full-time trader, I thought my job as a full-time trader is to take trades every day and to look for opportunities every hours, every seconds. Because if I didn't take trades, then I thought I don't do anything. I'm not working as a full-time trader. So I thought I had to take trades every day. I had to keep looking for the opportunities every day. That's what I was thinking. But then I did. I took trades every day, and then I failed. I got so many losses and got so many stress, and I got depression. So I had to go to hospital, a psychiatrist to cure my depression. But after that experience, I realized that the number of trades doesn't really matter in terms of how much you make profits. So in trading, I think less is more is true. Because the less you take trades, the more you make profits also becomes true in trading, but not in the ordinary world, ordinary jobs. In the jobs, the more you work, the more you earn, the more you make, the more you earn is usually the case in the world. But in the world of trading or investing, sometimes it works opposite. It can work opposite. And if it works opposite way, then you have more freedom. And this was one of the biggest psychological change in my trading career. I was so conditioned as a full-time worker, or when I was in the university or high school, or when I was in school, I was always pushing myself to study more and work more and earn more, and that was my mindset. But it completely changed after I became a full-time trader, and I feel much comfortable now. So, and this is the reason why I can still stay away from the trades like this way. Okay, JJ says, I feel relief, I take less trades. Yeah, so if you feel less stress, less trades and less stress, that would be great. Yeah, but you check charts every day, that's for sure. You check charts every day, but take less trades. So that means be selective on which one to trade. Yeah, he says, I agree. Honestly, I now look only at daily. I'll go week, maybe 2, if I don't see a setup that suits me. Sure. So yeah, you have to really be selective on which one to trade. Yeah, that's right. Yeah, again, thank you very much for joining. Good to see you. Oh, I don't trade in platforms. No, I never tried before, so I'm not sure. I only trade with my own money through my career. And here's my stats in the year of 2021 and 2022. So this is yearly stats. I have the win rate of 39% in average in 2022. 2021, my average win rate was 40%. And to me, 40% is really high. This has been really high because usually it's around the 30s, my win rate. And yeah, my PF has been 5.7, 8.19 in average per month. My returns were 13.8% in 2022, 11.40% in 2021. So, but like this, I have the stats every year, and these numbers has been around for the last couple of years, and that's why I stick to my strategy and I stick to my rules. And some months has been kind of rough. Sometimes I see only 2% of return or minus 1%. Well, in July last year, I only took one trade because I was in Japan. I was busy in my holiday in trip. That's why I took only one trade and it happened to be a loss in July. In August, I think I took only few trades also and had 0% return, break even. So I have some break even or small losses in the month, but it's totally fine with me because I know some other months can give me more profits than the losses overall. So yeah, it's really important to do. Yeah, okay. Okay, let's see. Okay, James says, there are times when you need to be proactive to the markets and other times know when to be reactive to the markets. Yeah, you don't have to be proactive anytime. You don't have to be. You can only be reactive to the markets. And whenever there are chances, you just take it. Otherwise, you stay away. It's that simple. Okay, in terms of the analysis, let me do it tomorrow on the weekly forecast. I will do the analysis on the Forex pairs, stock markets, and also index and Bitcoin tomorrow on the weekly forecast. Okay, hold on, let me go back some comments now. All it says, since I started attending your psychology lectures, it has modified my personality, especially in trading. Thanks so much. Oh, you're welcome, Ollie. You're welcome. Yeah, and I think what I say is just my personality, from my personality, so I know the way I think does not fit to everyone. Of course, there are some people who want to take trades every day, and I am not against them. Of course, I'm not against, because it depends on strategy, and depends on the personality, and depends on the style. But for me at least, if I talk based on my experience, I feel more comfortable being less trades and making more profits, and that's just my style. Yeah. So yeah, that's my mindset. Okay. Okay. You're not taking every step. If you objectively backtest KTS, do you not get these results? Okay, subjectively kills. I had to stop trending following as I believe it no longer works. Yeah, if it doesn't work for you, then you don't have to use. As long as it works, you use. That's it. That's that simple. For me, it works for me, and that's why I keep using. But if I see that it doesn't work, then I think I modify. I minor change, I modify, I backtest, and I fine-tune my strategies. And in terms of the trends, sometimes I hear that I would say like 70% of times the range in the market, and only 30 or 20 or even only 10% are trending in the markets. And I think that's also true too, but it depends on the time frame. Let's say you look at in Forex now, you look at the daily time frame, and Euro AUD is now range in terms of the daily, because the Kumo flat and Kijun Sen flat, and the market has been just up and down. This is range, obviously, so we never know which way it goes for now. I'm waiting for the break of the resistance buy, but now this is range. It may go down. So this is range in a daily chart. But let's say if you look at the 1 hour, this is bearish. 1 hour shows Kumo is down, Kijun Sen is down, Chikou span below candles, so this is bearish. I think on Monday the market breaks support and goes down this way. So it depends on which time frame you're watching. And if you switch time frames, then you will see the trends. is also true. And that's why I take either daily or 4 hour to follow. I don't only stick to the daily time frame to follow, but I take also 4 hour or sometimes even 1 hour to follow. And I look for opportunities in this way. So yes, trend doesn't last that long recently, but there are trends in different time frames. Yeah. Okay, so that's a little bit of a trend about the idea towards the trends. Okay, Brother Bill says, I like your strategy. Seems like you have an edge of up to 21% on the market with these stats. Yeah, that's right. That's right. So I took 5 wins out of 14 trades. Yeah. Okay, Oli says professionalism is who you are in trading. I guess trading every day is like betting, so it becomes gambling. Yeah. So discipline becomes a key. If you keep changing the rules, then it doesn't work. If you keep changing the discipline, then it doesn't work. Well, I mean, if you lose discipline, then the strategy doesn't also work. So, and this is not about believing on something. This is backed up by the stats. And these pairs on my watch list on the right, I have 21 pairs on my watch list, and they are here because I have backtested it 100 times on each pair, and I proved myself that my strategy works, the KTS works on these pairs, and that's why they are here. But I don't show New Zealand pairs because I backtested it KTS and it didn't work. That's why they're not here. So I don't believe my strategy, but I know it works because it has been working for the last couple of years. So, and I think that's the key, right? We have to also always see the stats. And as long as it works, you keep using. If it doesn't work, then you stay away. It's really simple. Okay, Manly says, hi Kei, how can we manage to fall in the fake breakouts? By the way, are you a breakout or the pullback trader? I am neither. I actually take both. Whether it pullbacks or breakout, I take entries. Even before the breakout, I enter trades too. So I'm neither. But how to avoid the fake outs is again also about by the risk management. Let's say the market's going down and you take a sell. Let's say at the breakout, you take sell, or maybe at the pushback and pullback, you take sell, for example. And if this becomes a fake out, then the market goes up and goes back within the range. And that's when you exit. So in this case, you was a fake out and you lose a little bit. But again, if you keep the losses small, then that's just fine. If the market goes down, you can re-enter the market again, sell. And if the market goes back, you continue to stay away. Or you look at other pairs and look for other opportunities. So this is also kind of a common question, how to avoid the fake out. My answer is by the risk management. If it becomes a fake out, then just cut the loss very quickly and then look for the next opportunity, or simply stay away. Because we never know if this will be a fake out or not. In this case, there was a previous support. There was a support level here, so once it breaks, it may be supported and goes back. But let's say if there is no support, but sometimes the market becomes fake out and the market reverses. In that case, I usually exit very quickly and if the market start to go down again, I re-enter market, because I will never know if the breakout becomes fake or not. So that I expect the bigger reward than the loss I took on the fake out. So that's how I avoid the fake out. Yeah, markets are unpredictable and we will never know how the market goes. The breakout happens, and sometimes after the breakout, there's no pullback but it just goes down. This happens too. But sometimes there's a pullback and the retrace exactly to the previous support and goes down. This happens too. But sometimes the market breaks the support and then goes down too. This happens too. Or it actually be supported once and then breaks. This pattern happens too. Or it becomes a descending P wave and then breaks finally down. It happens too. So there are so many patterns for the breakouts, and there's not only one pattern. So for me, I don't care about how the market breaks as long as I get the confirmations for the entries I take, and whenever it reverses, I exit. Whenever I take trades. But again, if there are supports close by, then I most likely I may not trade. But I mean, if there's a strong support or resistance, it's like multiple touches, maybe 1, 2, 3, 4 touches or 5 touches, then I do mind that level. I may not be in the trade, or I may choose other pairs to take trades than this one. But if there's no supports, then I simply, or if there's only one support, then I simply take opportunities based on my strategy. So the only way to avoid the fake out is by the risk management, in my opinion. Yeah, Ighao says your win rate is low. Does it mean you got stopped out a lot? No, it doesn't. My losses are bigger. My losses are more than the wins, but I exit before the price hit the stop loss. So I never exit at the stop loss unless there's a big spike or unless there's a big I wave down. Mostly I exit before the price hit the stop loss. Can you create a playlist with all your monthly reviews? Oh, I have the playlist on the website. If you come to the Global Trading School web page, then you can find all my monthly performance. Yeah, but overall, I think the market has been really rough and choppy. So, and next week we have big news also. So we'll see. So here is my web page. Oh, by the way, I'm editing the website now because I think I was a bit too complex. So I'm editing now. So you will see some changes. But here is services, GTS. Just click on this one. In this web page, scroll down and you can find the interviews and also my monthly performance here in this web page. I have been recording the videos since February 2021 each month. I review my performance each month, and you can watch all the videos. So yeah, so like this. Okay, yeah, again, thank you very much for joining everyone. Good to see you. Hussein says how to grow patience when taking a position and not mess with stop loss levels. That's a very simple question, but I think very deep to answer it. How to grow patience? My question is, why you don't be patient? What makes you not patient when and move the stop losses or mess with the stop losses? You may move the stop losses after you enter trades. This is kind of common among the students I have taught before at the GTS, is that sometimes people are too much rush to make profits because whether they want to change their life, they want to earn money quickly, or they want to quit the job, they want to have they want to become a full-time trader as soon as possible. Whatever the reasons it may be, whenever you're rushed too much to make profits or to quit the job, then you may lose patience. So again, less is more is, I think, true in trading in terms of psychology too. The less you become greedy, the more you make profits is also true, because you're relaxed and you don't feel pain in the losses. You don't feel fear of missing out because you're relaxed, and that actually makes it profit. But if you rush too much, and if you put yourself too much into trades, and if you get frustrated because you don't take trades every day, every week, then you may be in trouble. You may lose patience. So yeah, I think that's something I came up in mind in terms of the patience. Yeah, okay. We says, do you normally focus on technical analysis only? Yes, I do. Yeah, I don't trade by the fundamentals. I only do technicals. Okay, pound USD analysis. Let me do it tomorrow on the weekly forecast. Okay, let's see. Bitless says, I usually follow 1-to-1 ratio, which means 1% loss, 1% profit. Should profit be more in ratio as compared to the loss, like 1% loss and 2% profit? It depends on your win rate. If your win rate, if the strategy that use the win rate is more than 50%, then 1-to-1 ratio is okay, because you make profits. But if your win rate is less than 50%, then 1-to-1 will make you lose. So it depends on the win rate that you have on your strategy. Okay, hello TSM, good to see you. Okay, Heber says, hello, are you a swing or day trader, and what pairs do you forecast? I focus on the pairs on the watch list like this. I focus on the 20 pairs on my watch list. And I am between the swing to a day trader. And I'm a trend follower. Okay, Men Strength says, hi Kei, I was wondering what was your opinion on US oil. Okay, let me do it tomorrow on the weekly forecast too. I cover the WTI and also gold and Dow Jones, Nasdaq and S&P and all the index. Let me cover tomorrow on the weekly forecast. It happens at the same time as today. Okay, Malu says, do you trade market execution or pending orders? I only take trades manually, so I don't use the pending orders. but I would say I take only market executions. Because again, sometimes there are fake outs, and when the fake out happens, the position triggers and the market goes, and I may lose at the stop loss. So I prefer to see how the price breaks the resistance and support and decide whether I take entries or not. So I prefer to trade manually. Reza says full-time trading is very, very hard. Okay, what do you think? Why do you think so? In terms of psychology, in terms of the profit management? Yeah, I felt like before, I felt the more I lose, the more I felt uncomfortable and more stress. Because being full-time, if you have no other source of income, then losses becomes frustrating. In that sense, it may be very hard. And if you can't find opportunities for a couple of days, then it may be frustrated, and it may makes you more difficult and frustrated and very hard. Oh, Manuel, oh, you're welcome. Yeah, thank you for the comment. This spreadsheet is actually created originally for myself because I wanted to track my records on my own, so I created myself. And after I started my teachings and share the spreadsheet, I lay out nicely like this. I colored yellow, green, blue, and I put the graph also. But before, when I was doing myself, when I was using the spreadsheet myself, it wasn't like this. It was more clear, more like a plane, and without any colors, without the graph, it didn't look like this. So it looks much better now after I started to teach. Yeah, and I prefer to track the trades manually on the spreadsheet than the stats from the broker or the platforms, because that way I remember each trade and I feel I'm taking more responsibilities on each trade. Because I have to put these name and the day in time, buy sell, the price level, the lot size, the pips, and the exit price, and the reasons and some comments. I have to put this information manually on each trade, and I feel more responsibility and I remember more, so that when I look back, I remember exactly what I was doing on each trade. But if I look back my stats from the broker or from the platforms, then there are numbers, but I might not remember, and yeah, because they're produced automatically. But here, by doing this manually, I remember more and I learn more in that way. It takes time, but I learn more in this way, and that's why I prefer a spreadsheet. And it looks better. And also in this spreadsheet, I want to count the break-even as break-even. Let's say break-even trades, for example, on this one, pound JPY, I took on the 14th February was break-even. But this one, let's say the market goes up and I take a buy, and I put the stop loss here, and the market goes up again, and then I set the break-even. I move the stop loss slightly above the positions so that if the market goes back, I don't lose. But technically here, I move the stop losses slightly above the positions, maybe 1-2 pips above. So technically, this trade will be counted as win in the broker. But I want to count this as a break-even like this. And this is another reason why I want to use my own spreadsheet. so that I know how many break-even trades, how many win trades, and how many losing trades. I can see the stats at a glance. And it actually shows it on top of the spreadsheet too. Win and loss and the break-even trades. I can see at a glance like this way. So okay, let me see. Let me take a few more comments until the end of the live today. The composer says, hello Kei, I wanted to ask you, do you all confirmation signals have to be at one candlestick or there's a valid distance? Yeah, it doesn't have to be on one candlestick. I think it would be impossible to see multiple confirmations in one candlestick. So yeah, some distance is fine. It doesn't have to be that strict. JJ says, how long did you trade demo account before switching to live account? Oh, that's a big story. So first, I created the live account of 10,000 and I blow that one. And then second time, I created another let's say another $10,000 account. And then I lost half. And I created demo account and practiced for 6 months. And then finally I found my strategy and then recreated another one. So yeah, so that was my journey. But before I start with the first 10,000 live account, I was trading demo account for half a year. And then switch to the live account. But at that time, I didn't know what I was doing, so I simply saw some nice result in live trades for 6 months, and that's why I thought it's ready to trade live. But looking back, I think it was not a good decision. I think now, looking back, how long you do demo trade does not really matter, but the stats, how much win rate, how much PF you have is more important than how long you making profits every month. In my opinion, if you have the PF of above 3 on live trade for 3 months, then you're ready to do live trades. Profit factor above 3 on live trades every month. After 3 months, then I think you're ready to do live account. But again here too, some people may prefer to start live account than demo account because you may feel that you're not learning anything on demo account. In that case, you can start with a live account but small account and then practice to see if you can have PF3 for 3 months, and then you can add more money in your account and compound the profits. Okay, so looks like time's up now, so I will be ending live in a few minutes. But thank you again for everyone for joining today's live stream as always. I appreciate your participations and also I appreciate your support as always in my YouTube channel. So yeah, tomorrow I will be doing the weekly forecast as usual at 2 p.m. UTC time zone. So hope to see you there tomorrow. And to those who are Ichimoku members, I will see you soon. Today, in Saturdays, is the topic of the philosophy of Ichimoku, and I will introduce some of the concept of the span, like the Senko span, Chikou span, and how Goichi Hoso says about the span. That's something I share today for the Ichimoku members. So hope to see you there too. So either way, I hope to see you again soon. And until I see you next time, please stay healthy, stay safe, and stay gold. Bye for now. Mata ne. Thank you very much.